Hello and welcome to Big Deal. Today, I have with me two large global financial investors investing into India, Brookfield as well as Blackstone. Let me first introduce Amit Dixit of Blackstone. Amit Dixit, thanks so much for joining us on CNBC TV 18. You just recently signed a transaction in the financial services space in Aadhaar. Now, talk to us about the entire housing finance space. How do you view it and why an interest coming in from Blackstone?
Yeah, so we have committed $500 million to Aadhaar, which is India's largest independent affordable housing company.
Yes.
Average ticket size of loan of about 8 lakhs. And I think the way this transaction came about is the NBFC crisis.
Right.
Because this company was on a path to IPO, and it's a very good company, doing well, growing well. It's a 10,000 crore balance sheet this company has. Over 1 lakh borrowers the company has, and its credit losses are only 11 basis points over the last few years. So very low credit losses, very solid company. However, this NBFC crisis created an opportunity because the owner of the company wanted to divest this asset. We were able to move in with speed and certainty and not sort of get rattled by what was going on. And we were able to execute the transaction. And I think housing finance especially affordable housing finance, is a sector we have liked for a long period of time.
Right. But
we haven't found the right opportunity of our ilk where we can play, a meaningful role. Here we are taking over 100% of the company.
Yes, but you did have many options in this particular space, because in the NBFC financial services space, a lot of these assets are available. You had spent a lot of time with PNB Housing Finance also, but then you struck a deal with Aadhaar. Now, what do you think about the rest of the pockets of financial services? How do you see those? Are you interested in those also apart from housing finance?
Yeah, sure. I think overall, the way we view ourselves is business builders, not just financial investors. So if all we bring to the table is capital, then we are probably not the right investor for that opportunity. But if we have an opportunity to build a business, which is what we did with Aadhaar, we have a meaningful stake. So I think there are many attractive categories within NBFCs, within banks. Now you are seeing within AMCs, several of them are in the market, or various other financial services institutions. But our core point is unlikely that we will take a 10-15% stake in a public company, which is out there. That's just not our strategy. We try to find something more meaningful, and I'm actually quite excited about this space, given the amount of volatility in this space right now, and the need for long-term, patient capital with a business-building mindset, as opposed to a more short-term, opportunistic mindset. And I think you will see a lot of opportunities, whether it's actually buying the loan books itself from the NBFCs, or investing in NBFCs themselves to capitalize them, because many NBFCs need private equity capital. Or you have a process going on whereby RBI is now letting private equity take meaningful stakes in distressed banks. So that's going on. And not to mention all the ancillary opportunities where you can go into an insurance company, into an AMC, into a wealth management platform. So I think this is a very exciting space right now.
Very huge space.
Very exciting. Overall for 2019, just as a vintage for private equity investments, I'm very bullish. I'm very optimistic this year, because I think rarely you see this kind of volatility, nervousness in the market. We are long-term patient capital. So we view this as opportunity to lean forward, not an opportunity to get nervous.
All right, so it provides you the opportunity, and also the structural shift that this sector is seeing will give you enough options to come in as well as a private equity fund, is what you say. Any particular amount that you have in mind that you are ready to put in as part of the kitty for financial services as you're exploring more opportunities here?
We don't actually have a target sector allocation. For that matter, we don't have a India allocation. Blackstone manages $470 billion globally across multiple funds. So the amount of capital is almost never ever the constraint. For us, it's the opposite issue. Are there opportunities which suit our style, suit our investment threshold, We committed $500 million to Aadhaar.
Yes.
This is the single largest buyout in the financial services sector in India. And we think it's a small transaction for us. So I think capital is not the issue, but can we find the right opportunity?
All right, so many more to come as the pain really continues in the financial services space. Which other sectors are going to be the top themes for Blackstone in the year 2019?
So auto is, especially auto components, we are quite excited about, because we are doing what we call in our terminology a buy and build platform. So we acquired a company called Comstar out of Chennai last year. It provides starter motors for various customers globally,
Yes.
Land Rover, Jaguar, Ford. We are using that as a platform, and we have recently executed a merger of equals. We have combined Comstar with another company. So this was a $30 million EBITDA platform. Now it's a $60 million EBITDA platform. So already double the size, which is already quite sizable. It's among the top 10 auto components company in India already with $60 million of EBITDA. And we have just started, because the amount of opportunity we are seeing in auto components, especially small companies which don't have the scale or the access to capital or management, who would like to be part of this platform and participate in the value creation. So I'm very excited about auto components and our ability to build this platform. Overall, another area, because of this volatility which is emerging, is distress of various kinds, whether NBFC liquidity squeeze, mutual fund issues around loan against shares, or just the IBC process.
Right.
That also is throwing up variety of opportunities, whether it's to buy loans, or whether it's to buy companies themselves, or whether it's to provide solutions to business owners who have some kind of an issue. So whichever way it plays out, we have a bucket within Blackstone to play it.
Okay.
So we have a private equity platform, we have a real estate platform, and now we have a special situations tactical opportunities platform.
Yes.
So whether it's a loan or a structured equity or a control deal, whichever way it comes, we are flexible to play it. So I think those two themes, auto component, buy and build, and second is opportunities emerging from market volatility and distress is something I think we'll see a lot of private equity action, at least from Blackstone in 2019.
So when you talk about the stressed opportunities, have you looked at the IBC process at all? Would you delve into that at all, or would it be outside of that?
It's all part of it. So we've put together a platform called IARC, through which our strategy is to buy non-performing loans. And so we are buying more loans out of that. We have bid on several assets in the IBC process itself, but the resolution process there has taken some time to play out. But I think it's just the beginning. The way you see this IBC evolving, is actually evolving towards maturity. Case law is getting established, precedences are getting established, which I think is all good news. Because I think the issue around bank loans under stress is a very deep issue. It's not just 10 or 20 high-profile names. It's like 1,000 names. It's small SME sector, so it's quite deep. So I think I'm quite optimistic that this overall trend, it's a very transformative reform by the government. It's an outstanding reform. And I think it's moving in the right direction, and it should present good opportunities for private equity.
So Amit, you're not the first foreign private equity firm which is saying that now the way IBC has evolved, we are getting more comfort in getting more transactions done in that particular space as it has matured. But any particular preference to a sector when you look at the stress space, because they are mostly capital intensive, which pure play private equity doesn't necessarily look at?
Yeah, that's a good point. That's why there are few sectors which I mentioned are few select sectors where we invest. We have deep domain expertise. We have a network of about 70 operating advisors. And as you rightly say, they don't tend to be in infrastructure oriented sectors. Having said that, there are multiple ways to play it, because it is creating, this process is creating opportunities even in sectors like consumer. In healthcare, we actually bid on a healthcare asset.
Yes.
It also creates opportunity for actually buying loans, where we are a little bit more agnostic. It actually doesn't have to be, because you're not wearing an equity hat.
Right.
You're wearing a more a lender hat in those scenarios.
Right.
So those opportunities can come where we can participate.
Do you back the promoters or some strategic players as well? Is that also one of the strategies that you would be comfortable with?
We are very flexible. I think we are heavily focused on the quality of our partners and our trust with them and their trust with us.
Right.
That has been the cornerstone of Blackstone for 13 years in everything we do. Real estate, private equity, tactical opportunities. Partner selection is critical for investment success, and that's going to continue going forward.
All right, so you spoke about the stressed asset space, auto components, you have invested in financial services you're keenly looking at. Any other theme that I'm missing out on? What about industrials? Is that also a space which you are looking at closely?
So industrials is quite interesting. Within industrials, we like a theme called B2B2C,
yes,
which is business to consumer. We actually invested in a company in 2012 called SH Kelkar, which makes fragrances and flavors for all the FMCG companies. It's been a fantastic investment for us. The company is now publicly listed. We've made a very strong return because it doesn't have a branded product, but its fragrance is there in every shampoo or any perfume you use or agarbatti or what have you. Similarly, packaging companies or other ingredient companies who are levered to the same trend. The same trend is domestic personal consumption. India has a huge middle class that will consume more FMCG products. The suppliers to that benefit. So I think it kind of falls within industrials, or you can say it falls in consumer.
Right.
But that B2B2C trend is something we track very closely. So we have executed on SH Kelkar, and you will see us executing on another transaction. Hopefully, if things work out, we are pursuing that quite aggressively.
So while you speak about so many investment destinations that you're eyeing, what about getting returns from your investee companies? Given the volatility in market ahead of the elections, how do you see this space? And do you think you'll have to wait and watch for any exits at this point?
By the way, if you look, as I mentioned in my address also, we have sold from our private equity portfolio in India $2 billion worth of assets over the last 2 years. We actually have nothing much to sell. We had a view that last year, especially 2017,
right,
was a very good time to lean forward on divesting. Similarly, we have a view on 2019 to lean forward on investing. So I think we're largely done. We have nothing left really of any significant scale or size, which is more than 2 years old. All our deals like Comstar or Taskus, which is a BPO platform we put together last year,
right,
which is a BPO platform for consumer internet companies, Aadhaar, these are very recent deals, or Emphasis is only 2 years old, or IBS Software, 2.5 years old. So these are very recent companies. They haven't sort of played out their value creation thesis.
Right.
So I think, yes, to your bigger picture, is this a slow environment for exits? Absolutely, yeah, because there is a little bit of public markets, IPOs have been choppy, but luck or strategy, we at least are, at this point in time, relatively light on mature portfolio companies, so we can focus on new investments.
Welcome back. You're watching Big Deal. Now, let me introduce Anuj Ranjan, who heads Brookfield in India. Anuj, thanks so much for joining us on cnbc TV 18. How has been your experience so far as investments in India is concerned? And what is your view currently, especially ahead of elections and a little bit of turmoil that we are seeing at the border?
Sure, our experience in India has been great. We've invested about $7 billion, most of it in the last 5 years, although we've been in India for about 10 years. So the first 5 years we waited, and the last 5 years we really invested. And part of the reason that we are excited about the country and able to do a lot more is fundamentally things on the ground are looking quite good. And I can talk a bit more detail about those, but we think the RBI has done a great job in terms of controlling and bringing down inflation. India now has the highest spread between the bank rate and inflation in the world, double what other emerging markets are. It's giving the RBI a lot of room to further bring down interest rates. At the same time, you have 1 billion people that are now being included in the formal economy through a combination of affordable data, and a combination of what I say is the Aadhaar effect, the government's program to get unique identifiers to all of these people and, frankly, distributions of cash into their bank accounts. And so all of that coming together, every business of ours, we're seeing great growth on the ground. So we're very excited.
All right, so real estate, infrastructure as well as private equity.
Absolutely.
How do you, focus on all three in terms of the priority as well and in terms of the amount deployed? And how much are you looking to deploy? What is the strategy there?
Sure, so far, a lot of our business has been built on the back of real estate and infrastructure. So of the $7 billion I mentioned, roughly half is real estate, half is infrastructure, office buildings, roads, and energy. Private equity, though, is a very important business to us globally. It is a huge pillar of our business, and we are now very excited about private equity in India. Prior, private equity was more minority growth investing, and today private equity is shifting due to the credit crunch that we're having in the markets, and the NCLT and IBA process sort of forcing sponsors to sell businesses. It is transitioning to a buyout type environment, and that makes us very excited given all this growth that there are potentially great companies, great brands, great promoters to partner with, and that you probably couldn't have partnered with before. So private equity will become an increasingly important part of our business in India. Real estate infra will continue to grow, and infrastructure in particular. I think there is a lot that we can do here, and the government and some of the main companies, they don't need to hold these infrastructure assets at that low cost of capital, and they are looking at actually hiving them off, as we've seen in the market today.
So you have a large portfolio and a large plan here. Let's focus on infrastructure first.
Sure.
It's such a wide sector. Which are the components of infrastructure which you're more bullish on? And in particular, I wanted to know, what is your assessment of the telecom tower business in the country?
Sure. So, I mean, telecom towers is a good example. I think data, anything around data, is very exciting to us at the moment. Telecom towers, fiber, data centers, all three from an infrastructure perspective are going to form the backbone of this economy. I think what's happened with telecom towers is it was previously more of a private equity business. There were 12 customers, you had to compete to get customers, smaller telecom tower companies, and the entire industry is consolidated. There really are a handful of telecom tower operators in the country today. Much of it is actually captive.
Yes.
And there's actually only now 3 real mobile network operators in the country today. And so it has transitioned from a private equity business based on growth to being a utility business based on an annuity stream, effectively. These 3 are going to be here forever, and a regular stream of income will be on these telecom towers forever. And so the utility-like nature of these assets now makes them prime for infrastructure versus prime for private equity.
But you don't think that technology, which is growing so fast, could be a constraint?
I think the towers that they've been laid, there's 2 things that have given the towers a unique advantage. One is India has got over 400,000 telecom towers that have been put up, thanks to actually Jio as well, in many rural parts of the country, giving every Indian in this country effectively 99.9% coverage and access. That physical infrastructure is always going to be useful. They've also all been fiberized. A good chunk of the towers have been fiberized, and connecting them to fiber, allowing them to get data, especially as you go into 5G and you go onwards, I think that there will always be equipment that is hanging on these telecom towers, at least for the next 20, 30 years.
All right, and which are the other infrastructure pockets that you're bullish on?
We are also spending time, I'd say, on ports, on transportation, on other areas of infrastructure, that could be exciting, that could have opportunities at play. But I'd say energy is the biggest one for us, as evidenced by our interest in pipelines. It's a business we're in and around the rest of the world, and it's a business that we think that we can do a lot more in India, because by its nature, the gas pipelines today are owned either by private sector oil and gas explorers or by the government. And neither are the right pockets of capital for those businesses. Those businesses could invest that capital into their higher growth parts of their industries, and the government could use that capital elsewhere. So we, as an infrastructure investor, are quite excited about the energy sector.
All right, and as far as real estate is concerned, we've seen a lot happen in the NBFC space, which is the prime, capital provider for the real estate space. So do you think that there will be a cascading impact? How are you seeing the real estate outlook?
I think there is an impact happening for sure. Credit has dried up to real estate developers in particular, but there are other ways for real estate developers to raise capital. And one is bringing in joint venture partners in their developments. One is selling assets entirely. Some of them are income producing assets like office, like retail, like hospitality. And part of it will just be a different kind of credit market. I do think the euphoria around credit to real estate has gone away. And today the deals that are being done are probably more measured and probably more appropriate.
Right. And do you think that there is more opportunity which is going to come in real estate because of the structural shift we are seeing in NBFC? And would you be keen on an investment or more investments at this point?
Absolutely. We are seeing ourselves in two ways attacking the real estate market. One is we've already bought 28 million square feet of office around the country. We can buy more office, more retail, more hospitality from any of the groups that need to finance themselves and don't need those assets on their books. The other is on residential, where I think that we've already done about $450 million of investments in the residential sector. Not quite as loans, but more as structured finance. And I think that market could grow significantly in the absence of NBFCs.
All right. I like the way you say that we are going to attack the real estate space. As far as the private equity is concerned, now in that practice, what are the areas that you're most interested in and where you'll be spending more time?
So I think, it's early days for us in private equity in India. We have certain businesses we have a lot of expertise in around the world. So that is some low-hanging fruit areas where we think we can bring our operating experience from around the world to India. That could be helpful. But I think investing in businesses in and around where we have a presence in India already. We are a big real estate and infrastructure and power owner and operator. If there are businesses in the services or industrial side that either supply to or service those businesses, that's where we have probably a competitive advantage and a knowledge advantage. And so that's good low-hanging fruit for us, in addition to financial services, which I think is something that we know a lot about, being a large asset manager globally. So areas, we definitely think that for us it's going to be important that we invest in areas where we can add meaningful value, not just with our dollars, but with our knowledge and with our operational capability.
So the strategy will be to be a financial partner, or you're looking at buyouts as well? What is the strategy there?
Both. I'd say with great sponsors, great partners, and great brands, we'd love to partner and be a participating investor with them. I don't like to use the word active because people think it's activist. It's not that, it's participating. Right. We want to be we want to bring value add where we can without necessarily getting in the way. At the same time, if there are opportunities for buyouts, that's one of the few things that we know how to do very well, given we've done that quite a bit already in the country.
So any particular sectors apart from financial services that you mentioned, consumption, healthcare, IT, these are the favorites of most of the financial investors? I
think all three that you named could be of interest to us, but I would say financial services and what I'll classify as infrastructure services are two areas that we're probably spending more time.
And financial services is also a very large space. So which pocket do you think? Is it insurance, housing finance, NBFCs, or banks?
It's all of the above right now. And right now in this market, all of the above are opportunities that are available. So we're spending time across the board. Given the credit situation in the country, I think things around the asset management or credit markets, NBFCs, housing finance space are quite interesting.
And given your experience so far in this particular space in India, how do you see the valuation expectations? And given the market volatility, is that also impacting or derailing talks at this point?
So in some ways, yes. On one hand, valuations look expensive because people look at the Sensex. But the reality is the Sensex is driven by 10 companies that have driven the markets up, the 10 biggest companies in the country. The rest of the companies are actually down. And so valuations outside of the top 10 or 20 companies in the country are not necessarily a challenge. And therefore, we're seeing opportunities. At the same time, of course, with the top 10, 20, we have found inventive ways of partnering, like with Reliance and others, that allow us to still participate in their story.
All right, when you look at the companies, are there any challenges while investing? Because you've spent some time now in India. Is your initial euphoria while entering India still intact, or has it gone up or down, and basis what?
I think taking a long-term view, we're more excited about India than we've ever been before, just given the speed at which we're seeing the economy come back. In the short term, there are a bunch of things, the credit issue, the NBFC issue, elections around the corner. There's a few things that could always give people pause, but we think India is going to continue to grow, and we're here for the next 100 years. And so my time here, we're just going to try to do the best we can over the next 10, 20.
All right, my final question, your short-term view on how much you're going to deploy in the near term, say for 1 year.
So it's hard to put any number to it. We invest out of global funds. So we could do zero and we could do our whole funds here if we wanted. I mean, we wouldn't, but we could. Realistically, we've raised, we are on track of raising $50 billion across our 3 flagship funds and various strategies globally. A good chunk of that could come to India. We're already $7 billion of assets under management in India today. I don't see any reason why that number doesn't double or triple over even the short term if we find the right opportunities.
All right. Thanks so much, Anush,
Thank you
for
very
your
much.
time.